What is up, YouTube? Today I got a special treat for you guys. I'm gonna be giving you guys an inside look on my full ATM strategy. So I'm gonna be going over a lot of new concepts that you may not be familiar with, but I'll try my best to make this as simple as possible so that you guys can use this strategy, backtest this strategy, and hopefully become profitable with this strategy just as I became profitable. All right. So without further ado, displacement versus manipulation. So my strategy involves a lot of technical analysis as well as ICT concepts and a bunch of other concepts that I learned over my 3 years and a half of really trading the financial markets. So it's kind of everything I learned mixed in one. So this is really good for you guys. So you don't have to go down the long journey of trying to look for a profitable strategy such as I did. So you could just kind of just follow this video and take notes so that this video could really help you develop your strategy and become a better trader. So displace slash versus manipulate. So when there's liquidity in the market, we will either displace at that liquidity or manipulate. So price will either manipulate at that liquidity area, whether it's buy side liquidity or sell side liquidity, or it'll manipulate or displace. All right. So when the market displaces, this is a sign that the market will continue buying or selling. Manipulation is a sign that the market will reverse. So if you look at this example here, so let me get my highlighter. All right, so here we had liquidity here, right? So whenever I'm marking up my charts, I always like to look for areas of liquidity. So areas of liquidity in a retail kind of sense could be an area such as, let's say, resistance, right? Or support. So anywhere where the market really never hit again. So let's say the market shoots up like this, and then instead of like continuing and going up, the market just, let's say, it just hits this area, and for a while it just doesn't go back to that area, right? So for a while the market never came past here. So this could be a form of liquidity. So with displacement, we want to see a strong, in this instance, a strong candlestick buying above. So if you get a strong candlestick buying above and it closes above strongly, this shows that there's a lot of buying momentum and that the market wants to continue pushing up, and vice versa. So let me erase this. So let's say we have liquidity down here, right? And then the market just trends up, then eventually has a huge candlestick going down past this liquidity area, right? So this is a clear sign that the market wants to continue pushing further down because this was a strong momentum push, a strong closing too below this liquidity area. So this took out sell side liquidity. So this was a strong closure. So if we look at this example, we see we had liquidity marked up here, buy side liquidity, market came up, and look at the candlestick that passed it, right? This is a strong indication that the market wants to buy up because it did not manipulate at liquidity. Instead, it displaced. So it could either do two things: manipulate or displace. And you'll see an example of manipulation coming up shortly. So keep in mind, whenever you get displacement at a key liquidity area, you could expect the market to continue in that direction. So when we do create displacement, we normally get a fair value gap. So if we look here, we get a fair value gap. So whenever the market displaces an area, you could expect to see a fair value gap that happens and this is where we'll start looking for our setup. But I'll go more into that as we go on. So let's look at an example of manipulation. All right, so example of manipulation. So manipulation is kind of the opposite. So with displacement, let me just go back here. Displacement is a sign that the market will continue buying or selling in that direction, where manipulation is a sign the market will reverse. So if we come here, let's say we have our liquidity here, right? So we have our liquidity here. And instead of the market doing something like this, right? Notice how market shot up here. This displace, right? Let me just put a D to show that this is displacement. And notice we have a resistance / liquidity area here. So once the price comes back to this area, notice how we did not even close above, right? We didn't close above, and we didn't get a strong push above. So this kind of showing that the market does not want to really buy up anymore. It's not showing buying pressure. So it's showing that the market wants to reverse at this area because we're failing to close above this area, this liquidity area. We're failing to close above. We keep wicking above, manipulating price, stopping out. People who were in, let's say, sell orders, we're stopping them out, right? So whenever you see price manipulating at a key liquidity area, just know that price will tend to reverse. All right. So this is a clear indication that the strength of the market is reversing. So if it was buying, expect it to reverse and sell. So if we look here, I think I have another example. No. All right. So with that being said, we talked about displacement, what it looks like, and manipulation. So this is just a brief introduction about this. I go over this more in my Learn and Earn group chat. So we go over these type of setups every time. So just know the difference between displacement and manipulation. So this is kind of my checklist on what I like to look for. So the first thing that I'm doing, now that you guys kind of have a brief introduction on displacement and manipulation, first thing I like to do, for my higher time frame analysis, I like to go on the daily or the 4-hour time frame. So I'm going on the 4-hour time frame and I'm marking out my liquidity areas, whether it's buy side liquidity, which is just resistance in a way, and then sell side liquidity, which is kind of like support. So I'm marking out these liquidity areas and I'm waiting to see how price reacts at these areas. So on the 4-hour time frame or daily time frame, I want to see if we get displacement or manipulation. And based on that, I kind of get my bias based on that. So once we get displacement or manipulation, price tends to make a fair value gap, right? So another thing I like to do is mark my fair value gaps. My FVGs, I like to mark that out on my 4-hour time frame. Then I wait for price to get in that area. So let me see if I can illustrate that. Let's see. So let's say we get something like this, right? Let me change the color. All right. So this is a buying example. So let's say we have liquidity here, right? So I'll put buy side liquidity, BSL. Excuse the handwriting. My handwriting is kind of terrible, right? So BSL, buy side liquidity. So I'm waiting to see if the market is going to displace or manipulate at this liquidity. So let's say the market displaces, right? So the market displaces. And let's say we have something like this. Right? Let me erase this buy side liquidity. right, so let's say we have something like this. All right, hopefully this makes sense to you guys. All right, so let's say we have something like this. So this candlestick displaced above this liquidity area, this buy side liquidity. All right. So what I would look for once we get displacement, and mind you, this is on the 4-hour time frame. So on the 4-hour time frame, I'm waiting for a price to displace above liquidity, or yeah, I'm waiting for price to displace above or below liquidity. In this example, it displace above. So after it displaces, 9 times out of 10, there will be a fair value gap on that displaced candle. All right. So on this displaced candle, I would mark my fair value gap, and then I'll wait for price to play back into this gap. So once price is in this 4-hour fair value gap, then I will drop down to a lower time frame and start to mark my analysis. So right now, this is like the first step. So when I'm on my 4-hour time frame, I'm waiting to see how price reacts at these liquidity areas. Then I'm waiting for a displacement, then a fair value gap on the 4-hour time frame. It could be the daily time frame as well. So once I get that, let me come here. So once I get price to get in that 4-hour fair value gap, then I'm dropping down to a lower time frame and sticking to that bias. So if it's a buying fair value gap, I'm looking for buys on a 5-minute time frame, and I'll go over my entry setup for that as we continue. All right, so let me show you an example of this. So if we look here, let me change this color. Let's go with yellow. So if we look here, we have a fair value gap on the 4-hour time frame. All right, fair value gap, 4-hour time frame. So I marked my gap for this. So we didn't get a displacement above here, right? But we do have a fair value gap on the 4-hour time frame. So I marked this fair value gap, and once it hits within this area, I'm dropping down to the lower time frame. So we have our fair value gap 4-hour, and now we go to the lower time frame. So once price is in a fair value gap on the 4-hour daily time frame, we're dropping down to our change the color. We're dropping down to our 5-minute time frame, and I only trade between 9 and 11 a.m. Eastern time. So I only trade within those time periods because that's normally when you find the best setups. It's normally when the market wants to actually move, and you're more likely to win trades if you're trading at that time, just based on my personal experience. All right. So once price is in that 4-hour fair value gap, drop down to a 5-minute time frame. Between 9 and 11, I'm looking for my trades, and these are kind of like the criteria that I need to I need all this to happen for me to even consider taking a trade. So I need price must be above or below the Asian range or Asian session. I'll show you guys an example of that. And must be in the right time, and we must mark our buy side liquidity and sell side liquidity on a 5-minute time frame. So having all this in place, having the whole checklist, this really keeps you from just taking any random trade. As a trader, you need to have some professionalism to like really help you. You don't want to just take random trades, especially when you're dealing with a lot of money. You want to take the best possible setups available because you're dealing with money. You don't want to just take anything, right? Just think about it in this sense. You don't want to just date anybody, right? You want to actually date quality, someone who has like high class, or someone who's compatible with your needs, right? You don't want to just date anybody. All right. So it's kind of like trading. You want to take the best setup possible. Don't just take anything. All right. So This is an example of marking buy side liquidity or sell side on a 4-hour time frame. So if we look here, I have this indicator too. So this is my agent session. This pretty much just maps out the Asian range, which is very important. It's very important. So this is the indicator that I have. If you want this if you want this indicator, just in the comment section, just ask for it, and then I'll try to get you set up with this as well. So this indicator helps a lot. So this is my agent session indicator. So notice how the first rule was price must be above or below the agent session. So if price is above the agent session, we're looking for sales. If price is below the agent session, we're looking for buys. But we want to make sure that it aligns with our higher time frame analysis, right? So if we come back to here, notice how we're in a selling fair value gap on a 4-hour time frame. So because our bias is sales, we want price. We want to take a trade when price is above. When price is above the agent session, because we're looking for sales. All right, so we want to wait for price to be above the agent session, and we're looking for sales. So here, this is a good condition for sales. So price is above, and we have our buy side liquidity above here, sell side liquidity below here. So what we would like to see happen is for price to come, tap into this, manipulate at this liquidity, and come selling down, right? So moving forward, we come here. So notice how we get exactly that. Let me try to zoom in. Oh. All right. Hopefully this helps. All right, so notice how above agent range, sells buy side liquidity, price manipulates. So this is a sign that the market's going to reverse, which is good because we're looking for sales. So we didn't displace above here. Instead, we manipulated. So this is a clean setup to take. We could have sold here. The stop loss goes above here. All right. So this would have been a clean trade, and our target could have been this sell side liquidity. So this is just one example of how we use our higher time frame analysis mixed with our 5-minute analysis during the right time of day to kind of get the best possible trade setups. All right, and just some more confirmations if you wanted more entry confirmations. So if we look here, so this, if you want to add more confluence, this was a divergent M formation, so you could use your RSI to find divergence, and this trade does really tank. All right, let's keep it moving. Let's see where are we. All right, so that's just one example. All right, so to get more in depth into the entry confirmation, you guys could like take a screenshot of this. So the entry confirmation on 5-minute, what I would like to happen, right? For A+ setup, you want to mark your buy side liquidity and sell side liquidity, right? So if you're looking for a sell, you want to first make sure price sweeps the buy side liquidity, right? You want price to sweep buy side liquidity so that it's extra confirmation that the price is going to sell, right? Because we know if it manipulates at the liquidity, is normally a reversal. So we're waiting for price to sweep liquidity, and once we sweep liquidity, we're waiting for a break of structure. So let's say we get something like this, right? Switch liquidity, break structure here. So structure breaks here. Let's say we have, so structure breaks. So now we have, this is checked off. Now we wait. Once structure breaks, most of the time there will be a fair value gap. And we're looking for this fair value gap. So this, we don't get in until we get an entry off of this fair value gap. So once price comes to the fair value gap, on the 5-minute time frame, then we get in. You could put a pending order, buy limit, sell limit. You could put a pending order, but we don't get in until price hits our fair value gap. Okay, so once price comes to that fair value gap, our stop loss goes above or below, depends, above the liquidity that got swept. So in this sense, if this liquidity got swept, our stop loss will go above here, and we will enter this trade and we'll target either a 1 to 2 or 1 to 3 risk to reward. All right, so keep in mind that you want to take a trade that aligns with your 4-hour bias. So if your bias is sales, right, the 4-hour bias is sales, then you can only look for a sell setup. You don't want to have a contradiction in your trading plan. You don't want to see sales on the 4-hour and then on the 5-minute you want to buy. That's a contradiction that causes more headaches, and that's a less probable setup. So you want the highest probable setup possible. So we want to align time frames and make sure each time frame aligns. So I like to make sure my 4-hour time frame is aligning with my 5-minute setup that I'm about to enter on. All right, so the 4-hour buys only look for buy setups on the 5-minute time frames. All right, so another thing, I'm gonna talk a little more about the Asian range, because I know a lot of you may be unfamiliar, but my academy, a lot of people already know about it. So let's say we have the Asian range, right? So this is one of the biggest criteria, and this keeps you from staying out of the terrible trading conditions and stuff like that. So whatever trade we're looking for, so let's say our 4-hour bias is showing sales for the Asian range, we want price to be above. So if we're looking for sales at 4 hours showing us sales, when I come to the 5-minute time frame, I want to see price above the Asian range. All right, because this is a clear indication that price will reverse. Then we get that sweep of liquidity, break of structure, fair value gap, right? And get our money. Now, if we're looking for buys on the 4-hour time frame, we want to see price start off below the Asian session range, right? Price needs to be below the Asian session range. We have buy side liquidity, market manipulates, right? Break structure, leads a fair value gap, buys up. All right, make sure this is aligning with your higher time frame analysis. All right, moving forward. So I have some examples here. So let's look at this. This was a trade I took last week, I believe, on gold. So notice how over here we have a 4-hour displacement, right? So we had our, let me change the color maybe to white. So we had our liquidity area here. And notice how price displaced above. The strong candlestick above, and it closed above strongly. Even the next candlestick closed above higher, right? So if we know we have displacement, we know 9 times out of 10 we'll get a fair value gap. That's exactly what we got. We got a gap here, and price came into this gap. So once price is in this gap, I'm on the lower time frame around between 9 a.m. and 11 a.m. looking for my setup, right? So notice, and also for my retail traders, notice how broke above resistance and is bouncing off support. So you could kind of use multiple confluences to help you with this. So what do I do now? I drop down to the lower time frame, 5-minute time frame. and I'm marking out my buy side liquidity and sell side liquidity. So right here, there's also liquidity here. So I'm marking out these liquidity areas, right? So I mark out my buy side and sell side liquidity. Because we're looking for buys, we want a sweep of sell side liquidity. So because we're looking for buys, we want to see price manipulate at this sell side liquidity. So as we go on, what do we get? So we get this. So we get price taking out this liquidity, right? Notice how let me erase this so you can see. Notice how it wicked multiple times at this liquidity area, but never closed below. So never closed below, wicked multiple times, right? Broke above structure. So this broke above structure, left a fair value gap here, right? Fair value gap. And then we just put our buy limit. Since we're looking for buys, we just simply put our buy limit right here. As soon as it taps us in, we're in the trade. Stop loss goes below the sell side liquidity. The price just shoots up, hits our target. Easy. Easy 1 to 2, 1 to 3. That's how easy it is. You're just aligning time frames, sitting back and waiting for all your criteria to hit, your checklist, and waiting for the right conditions. So this really helped me become profitable. I would say in this year, this really helped take my trading to the next level. So the strategy really helps me a lot. It really helped me become funded over 350K. This strategy is really good, and I'm just trying to pass on knowledge. Hope you guys take advantage of this. Just back test it, get better at it, so that it becomes more obvious and easier for you to see these types of setups. All right, so I hope this video helps. If you have any questions, you could put your questions in the comment section. If you want to join my Learn and Earn group chat and make money with us weekly, my link is in the description, and I'll see you guys in the next video. I'm out.